I was on a Zoom call with an accounting firm partner in Chicago last month, 12-person firm, solid clients, pretty good reputation, and I asked her, how long does your month-end close take your team? And she laughed, but not the good kind. She said, they're about 3 weeks if we're lucky, and that's with everyone working nights and weekends. 3 weeks for 12 people, and that's over 1,400 hours every single month just to tell their clients what had already happened. And here's the part that made her quiet. I showed her a firm doing the same work in 3 hours with just 2 people. Here's what most accounting firms don't want to admit. They've become historians. They spent 80% of their time looking backward, reconciling, categorizing, producing financial statements that show what happened last month, last quarter, or last year. And clients don't pay premium rates for history lessons. They pay for strategy, for forward-looking advice, for someone who can say, based on your cash flow pattern, here's what you should do next quarter. But you can't do that when your team is drowning in reconciliation work. The firms that are winning right now, the ones growing 30 to 40% a year, they flipped that ratio. They're spending 20% of their time on compliance and 80% on advisory. How? They didn't hire more people. They didn't work harder. They built an AI operating system that handles the backward-looking work automatically so that their CPAs can do the forward-looking work that clients actually value. So what does the 3-hour close actually look like? Well, it's not really magic. It's a system, 3 components, and most firms already have the first one done. Component 1 is the cloud accounting software. QuickBooks Online, Xero, Sage, you've probably got this already. Component 2, AI data extraction, tools that read bank statements, invoices, and receipts automatically. No more manual entry, no more I need this shoebox of receipts. The AI categorizes, codes, and flags anomalies. Component 3 is the AI review agent. This is the one that most firms miss. An AI that reviews the AI's work. It catches the errors, it spots the patterns, and it generates a variance analysis, drafts the client-ready report before a human even opens the file. Here's the mindset shift. The human doesn't have to do the work. The human just reviews the exceptions. If the AI is 98% accurate, and modern tools are, then your team spends most of the time on the 2% that actually needs judgment. The unusual transaction, the client-specific nuance, the strategic recommendation. Everything else, automated, reviewed by AI, flagged for human eyes only when necessary. Here's the exact prompt that I teach firms to use, and I call it the Month-End Autopilot. You feed the AI your trial balance, your bank recs, and your variance report. You ask it to identify unusual transactions and flag missing accruals and draft a 1-page executive summary. What used to take a senior associate 8 to 10 hours now takes the AI just 4 minutes. And the output is often better because the AI doesn't miss a decimal point. It doesn't transpose a little number at 9 p.m. on a Friday night. And it doesn't forget to check last year's comparable. You feed the AI like 6 months of client financials and you ask it to identify trends, project cash flow for the next quarter, and then draft 3 specific actionable recommendations. Not the generic advice that you might be used to, but specific. Your AR aging is 12 days slower than last year, for example. Here's the exact follow-up sequence that you should implement. Here's the expected cash flow impact. Pretty cool, right? Clients don't want to know what happened. They want to know what to do. And this prompt turns you from a scorekeeper into a coach. And coaches get paid 3 times what scorekeepers get paid. Prompt 3 is the pricing optimizer. This one makes partners a little uncomfortable because they realize that they've been leaving tons of money on the table for years. You export your client list, engagement types, hours, and effective hourly rates. You ask the AI to identify underpriced engagements, scope creep, and opportunities for value based on advisory upsells. One firm I've worked with found $42,000 in annual revenue just by restructuring 3 engagements and adding a quarterly advisory package to 5 clients who are already asking for advice informally. So there you have it. These 3 prompts, Month-End Autopilot, Advisory Generator, Pricing Optimizer, will save a typical firm 15 to 20 hours a week per partner. And That's 750 to 1,000 hours a year. But the real money isn't in time saved, it's what you do with that time. Advisory work, CFO services, strategic planning, the stuff that clients pay premium rates for and that you never had bandwidth before to offer. So how do you actually implement this? Well, as an operating system, not as a toy. Month one, you're going to audit and tool selection. That's what we're going to do. We map every process in your firm. Month end, tax prep, client onboarding. We identify the AI tools that fit your stack. Not every tool, but just the right tools. In month two, we do integration and training. We plug the tools into your workflows. We train your team, not just button clicking, but mindset. You're not being replaced. You're being promoted from data entry to strategic advisor. In month three, we do the advisory launch. We package your new capacity into sellable advisory services, basically CFO light, cash flow management, strategic planning. We price it, we script the sales conversation, and we track the metrics. Advisory revenue as a percentage of total, effectively hour rate, client satisfaction, client retention, those kinds of things. By day 90, most firms see 25 to 30% reduction in compliance hours. 20 to 30% of revenue coming from advisory, up from single digits. Happier staff because they stopped doing the data entry. Happier clients because they finally get proactive advice. And happier partners because the firm is actually growing again. And the firms that do this now, they're building a competitive fortress. Because in 2 years, every accounting firm will have AI. The ones that implement it with systems training and measurement, and the ones that turn compliance into a commodity advisory into a premium service will be untouchable. The ones that don't, they'll be competing on price against firms that can deliver faster, cheaper, and with better advice. And that's a race to the bottom that you don't want to win. If you run an accounting firm and you're curious about what this looks like for you, I've built something. It's called the AI Accounting Playbook. It's a self-driven course that can be easily finished in just a few weeks. It helps you implement the full system, 9 levels of tools, the prompts, the workflows, and the advisory packaging, the measurement, all that stuff. Right now I have a founder member pricing going on for just $497, but the course is normally at $29.97, so it's a pretty good deal. Anyway, go to the AIblindspot.com, reserve your spot, or grab the free guide, 3 AI prompts every accounting firm needs, and see if this resonates for you. But don't wait. The firms that move in 2026 are going to define the next decade. The rest are going to spend that decade catching up. Thanks for watching, and I'll see you on the inside.